park one time on the scene like the money coming up on the green light. My way too heavy on the peak light. Money coming up, I pick up the piece nice. I park one time on the scene like the money coming up on the green light. My way too heavy on the peak light. Money coming up, I pick up the piece light. And we pick up the piece light.
What's up, guys? This is Mystery Blues FX, and yeah, the long and awaited series has arrived. The Fair Value Gap series. Yeah, it's been like my first month on YouTube, and a lot of people have been loving Fair Value Gap. So, yeah, the series has arrived. This is the intro, episode 1. Let's get to business, guys. Yeah, it's the Sombo new way. And let's go. So, guys, as you are looking at the charts now, clean. We're on the 3-month chart. Clean. So, what is a fair value gap? We're going to begin with that. What is a fair value gap? So, I love using this analogy. Okay, so I'll mark it first. This is a fair value gap over here. This gap left right here. But let me explain it. So, let's say this was a wall. So, let me mark this area. Right? This area was a wall. As this area is a wall right here, what did we do? We went up this wall. While we were going up this wall, okay, let's make it smaller so it makes more sense. Okay. Right there, okay. So, I love to use the painting analogy to explain fair value gap. So, this is the bottom of the wall. We went up the wall, we reached the top. But look what we left. We left a gap here where the paint didn't go in properly. Meaning, you see, this gap where the wicks don't touch. Like, here the wicks are equal. For example, here, they close the gap. But here we left the gap and we need to come back and repaint that area. So that's what a fair value gap is. Let me explain again. You take from the bottom, you go up, you come back to the middle because you left the gap. Literally just that. So I explain it again. It's a painting analogy. When you go up the wall, you will leave a gap like this. And you will come back and refill it and go up again. So take fair value gaps and trading with fair value gaps as painting a wall. It doesn't get much more difficult than that. It's painting a wall. Visualize that because I've made you visualize it here. Visualize that. Because it's literally just that. Because if I can explain it on the side, okay, the market goes up, right? As it goes up, as you are painting, you leave a gap here. You have to come back to the gap. After coming back to the gap, you can go up and break this high. Left here. That's how you use fair value gaps. This high left here will be taken after you come back into this. Another example is when you go lower. So, when you go down, you just use the inverse of it. There's a fair value gap somewhere here. What do? You go back into that area and you come back and target this low. A low will be marked with what? No, I don't want to put any text to that. Let's mark it with, red. Style. Oh my gosh. Red. Thank you. And after coming back there, what do? You break the low. Take out liquidity. So, what lies above this high and what lies above this low? Liquidity. So, liquidity lies above a high and below a low. You get that? I'll repeat it again. Liquidity lies above a high and below a low. Because after you've taken liquidity here, you can come back and take out this area. Or after taking out liquidity here, you can come back and take out this area. So after this happens, this will happen. After this happens, this will happen. Right? So I'm trying to make you see the analogy. Like, this is me, like, introducing you to the topic very easily and opening your mind up to it. So you see what we're dealing with here. I'll leave this and this on the sides. Okay. So this is a fair value gap. But when we are buying, because here this is a buy area, when we are buying off that fair value gap, we call it a BISI. BISI. We have a reason why we call this a BISI, and pay attention to the explanation of this. BISI means buy side imbalance, sell side inefficiency. That's the abbreviation for that. And this is a BISI. So let's mark this. This is a BISI. Oh my lord. Not there. Text. BISI. Sorry, let's go for capital. BISI. Caps on, man. BISI. And this is a SIBI. By SIBI, I mean sell side imbalance, buy side inefficiency. So these are really two important things to understand as we go into this topic, this type of trading. This is literally a strategy on its own. I want you to know that. Yes, there's a lot of things I can teach to you, but I'm teaching you the fair value gap. This is the fair value gap series, and we're about to have a lot of fun with it. So let's get back to business. So this is like this. So what do you target when after the market goes up from here, you're painting up, come back to the gap and go up again? What you are targeting is the high, as I've put it here. So when you go up, come back to the area that you left, you target the high that you created, and that's your take profit. Your stop loss should be 20 to 30 points or pips, whatever you call that stop loss. So in other words, it should be this much. This is a higher time frame, so you won't get to see it properly. I'll explain this again in the lower time frames, because this is a higher time frame first. So you get that analogy. So first, let me mark this area, right? This is a 3-month what? BISI. Buy side imbalance, sell side inefficiency, as I explained it before. Let me fix the visibility of this so we know that it's going to stay on the higher time frame here that we're busy with, so that when we come back to this higher time frame and fully focus on it, you know that I'll be explaining using this analogy again. Okay, this arrow again, leave it to months. This one again, months, because we want to be fully focused that it doesn't distract us. So also this one, let's fix this one. This one is months also, because it's on the sides. I don't want the chart to confuse you. So guys, as I'm doing this, I want you to remember this. When we are trading with fair value gaps, it's the what? It's us filling in the gaps we could not paint when we were going up or down. So the gaps that we leave during that moment when we are painting, those are the gaps that we call fair value gaps. So that you don't confuse them, the sell one is where we look for sells is the SIBI, sell side imbalance, buy side inefficiency. The buy ones are called what? Buy side imbalance, sell side inefficiency. You see? You get that. So, okay, I'm done with this. So let me remove this too. Okay. So as I told you, we go into that area and we target a what? A high. Highs in this series will always be marked with blue, and lows will be marked with red. Okay, so that might not be straight, I apologize, but okay, let's get to business. After you have seen that, okay, that's the high we are targeting, as market turned here, it left a gap here, another fair value gap it left here after what? Breaking the high. So after breaking this high here, there's a small high here that it took, because this is the higher time frame, remember. After breaking that high, there's another what? 3-month BISI. But in this situation, the 3-month BISI was used as a runaway gap, but we will not go into runaway gaps yet. Another 3-month BISI right here. Right here, let's label it quickly. 3-month BISI. Right? We broke another high here and it left another 3-month BISI. So it's important with this to understand what is going on the higher time frames to see, because from here we realize that this was our initial target. This is the 3-month chart, so this can take a full year to play out, because this is 3, 6, 9, 12. This is a year for this movement to play out. It entered this area when? October 2022, which you should understand that, oh, okay, it takes a while for monthly, like bigger chart movements to take place, the higher time frame chart movements to take place. That's why we start there, to see where we're going, to get the initial side, so we don't trade against the trend, because trading against the trend will make you blow accounts. Let's go to the 1-month chart. So on the monthly chart, we get there and we see what? That, okay, on the monthly chart, what did we leave? There's also a fair value gap here on the monthly chart, but the monthly chart one explains it even better because it's more precise. You see that? No, there's another fair value gap here. So I'll change the color of that fair value gap, right? And make it green. Okay. After us entering this fair value gap, after this exhaustion of price, after painting up and leaving a gap, we target the what? We targeted the high. But this is monthly, not the 3-month one, guys. The 3-month take profit is here. That's important, very important to remember. To keep in mind that, okay, we are still fetching a bigger idea and a bigger price. It's important to remember that, so you don't confuse yourself, so you're not clouded of what's happening on the lower time frames. So it's important to use the higher time frames to be more precise. So in this situation here, it also acted off BISI and went up. This is the 3-month one for this take profit, right? So let's move to the daily chart. On the daily chart, I love it when the chart does this. So on the daily chart, you see it's clean. So on the daily chart, what do we see? We see that this is a market maker buy model. But wait, I will not introduce that yet. I will not introduce the market maker buy models yet, because this is still the introduction of what's happening with fair value gaps. So what do we have here? This was CPI, right? CPI last month, and today is also CPI. So CPI last month, CPI BISI. It left a huge fair value gap that we tested and we used to initially break this high, right? We used the influence of the fair value gap to break the what? To break the high. And if you look at it, it broke a low here. took out the liquidity, entered into a fair value gap, and boom, we're above price. Now you're above the high. So when you look at that, you're like, oh, okay, that's interesting. So what will CPI do today? I know a lot of people will be asking themselves that particular question. That, okay, what will the market do today? So we move to where the market is right now, right? It's in this area right here. And we mark that, okay, we see a fair value gap here. Let me move it that way. I'll come back and fix it. There's a small fair value gap right here where price is moving towards. There's a small fair value gap, really, really small. You wouldn't pay attention to it if you didn't know it. So right here, there's a small fair value gap. And that's where price is heading right now. Entering this area, and we look for sales to go lower. That's a daily fair value gap, a daily SIBI. So in this situation, you see there are 2 fair value gaps. And we did not use the first one. Okay, here in this situation, we used the first one and went to lower prices, right? Where here, boom. But now we're in the second one. Where you might think, okay, but why didn't you use the top one at first? No, the market arrived in this area, turned at the 50% mark probably, and went lower. But this is still the intro, so that's not something to introduce first. Like, that will come with episodes. As we go with episodes, you'll receive all these things. This is just introducing you to the whole idea of it. So, right here, we used this fair value gap, the first one, and went lower to lower prices. So, in that situation, I'll prefer to go to the lower time frames. Because when I go to the lower time frames, I will see it clearer. You see, as you can see, the things, my higher time frame things are visible on higher time frames only. Lower time frames, my charts are still clean because I don't want to confuse myself. Let's just start the chart. So in this situation here, there's, okay, this change of price here, we break the high. After breaking the high, boom, we have fair value gap number 1, number 2, and number 3. You're probably asking yourself, why did it happen like that? Why did we decide to turn off the bodies in the first one? The wicks almost coming close to the second one. Why did we do that? Like, why did we not come back to this first one? That's interesting. And let's mark it down. Such things are really, really interesting, so we mark them down. We mark it down as the 4-hour BISI. 4-hour BISI, right? That's the top one. We mark it down like this. And the visibility of this, let's check it out real quick. Okay, so let's go down to the hour chart. On the hourly chart, wait, I can't introduce this because it's a different series, so let's not use it. Let me go to the 15-minute chart. Still, it's a different series type of thing, but on the 15-minute chart, we used another fair value gap because obviously these things, I know why it went up, but it's a different series, so I'm not going to include that thing in this series. I'm going to teach without it because I would have taken this trade knowing the reason why I'm taking this trade. So, let me just give you another way to know that, okay, we are taking this trade. So, if you pay attention, right, I'm going to introduce this but not really teach it at this point. Right here, right, let's remove this. Right here, at first, let's go to text. It was a 4-hour SIBI. I want to make you understand this. We went lower. When we came back like this, at this area, a person would have wanted to sell, but you wouldn't have took that sell. You know why? You know why this sell here was not valid? Because we did not break the low. This low was not taken for us to come back and say we are using this to go to lower prices. You see, if this had passed this low and came back into this area, we would have taken this low. We would have taken and used this SIBI and went lower. But you see, we still call it a SIBI because it was a gap. So what do we do with this gap? So we wait to see how price reacts of it. And as you see, price bounced off it, went higher. So after it was violated, after the candles closed above it, it changed from a SIBI into a 4-hour inversion fair value gap. Inversion fair value gaps are the inverse. So if a SIBI is violated, you use that area when it comes back to the area to buy. Because this was a sell area. When it comes back to it after violating it, we buy off it, boom, we gone. And it will respect it like that. Respect it to the T. So, just a quick recap. I've introduced fair value gaps to you. And I've shown you a glimpse of, okay, if it does not go your way and it's violated. And the only reason why it was violated here, because it did not break the low. So it did not have market maker structure shift to confirm it. That's something I'm going to introduce in another episode. So what you need to understand here is that we used it as an inversion fair value gap. That's just the intro of this, guys. I hope that you are on while I'm on, like the same level. We are on the same level of understanding. We may not be on the same level of understanding, but I've opened you up to all this, as this is the intro. We have not gotten into the juice of this yet. But guys, I've enjoyed the first video. This has been a long and awaited series. I've enjoyed this video. It's been a great video. It's been a great introduction to all this. As I'm saying this, here's another fair value gap right here. And this is a BISI. 4-hour BISI. And what did we do of it? Boom, we bought. And what did we take out? We took out this high. So what I want to say is that, guys, there's more content on the way. There's more interesting things on the way in this series, because this week will probably have 2 or 3 episodes, and the other series will have 1 episode every Monday. But this one will have 2 or 3 episodes this week, depending on the amount of time I have. But definitely 2. The third one I will see according to the schedule and the amount of time I have. So yeah, guys, it's been a great video. This is Mystery Blues FX. And guys, we have had an amazing time right here. And yeah, keep on pushing, guys. Rewatch this video as many times as you can and write down as many notes as you can. Because yeah, we keep on chopping and we keep on pushing. And as I always say, it's the Sombonyo way, the making money way, and guys, the take profit way. Thank you, guys.
Woke up like this, I'm going big. She gave me a kiss. Mwah. That nigga's sick, I'm going big. I am a king. Yeah, nigga, I'm in. They couldn't close all the gates cause I fit. Kicking your shins, I got no time for no quit. T63 in the mill, now that's a deal. I'm getting bigger and bigger, I mean. Little by little.